Okay, I'm going to make a recap on today's trading. I made a video earlier on my short strategy and mentioned in there that today I screwed up a little bit and just going to go through where that was. So I'll go through the watch list that I had and then have a little explanation of something else free market and then get into the actual trade. So AGC, my plan here was that we looked yesterday like we broke out of this 1664 area and that we could continue higher. That was my plan. I'm going to go through in a minute where I need to adjust some thought process. EVGO, my thought process was we broke over this and we may well end up going higher to 1960. NVTS, the initial idea on this was to, again, it's broke out, it looks strong. I know that there's quite a high short float, so this could well start squeezing. PETZ, I was keeping an eye on this one, thinking that if this 571 can break, it will most likely begin to sell off. And then the others I wasn't really watching intently, there wasn't that much opportunity. Now, the main mistake I actually made today was during the pre-market. And the mistake was that I didn't quite follow one of my criterias for when to long and when to short a stock or when to decide whether to go long or short. One of those criteria is that if it is the first breakout day or after the first breakout day, I want to continue looking long. After the second day, my bias switches only to short. It could go higher, it could give great long potential, but I'm not looking to go long because I don't think the edges are strong there. When I looked at AGC, EVGO, and MVTS, these three I had as longs, and as we can see, although yes, technically we did break a high at 1664, this isn't after a consolidation period, this is, oh, it just happened to break the previous day or a couple of days ago high. If we look at where the consolidation period was, it was here. So we have day one of a breakout here. Yesterday was day two. Today, 2 days ago was day two. Yesterday was actually day three, which means that I should only be looking for a short play on it. EVGO, same story here. We had the first breakout day here. Day two gapped up. When a stock gaps up this much on day two, I'm fine to short it. And we're still just in that, we're just making a move higher. We are not breaking out. We've just taken out high. So again, the bias here should have been on shorts. And MVTS, again, exactly the same. We broke out here. This is just about a good enough breakout for me. We've had a few days of consolidation, broke out. Yes, there was a long, so they should only have been looking on the short side. So that was where the mistake was. I got a little bit too, I think, married to an idea. It's the weakness that I'm working on most at the moment in my trading, that I noticed that I will sort of like get a small idea in my head in terms of like this could squeeze because maybe there's a really high short float, maybe I've seen someone speak about it, or maybe I just sort of like get really into this has got to do a certain thing. And as a result, I end up I wouldn't say ignoring, but not really sort of like looking close enough at it and just taking a step back and thinking, okay, what is the chart actually in front of me? Instead, I get my ideas kind of just there, and then it becomes a bit like just a train following that through. So with that in mind, we'll go through the trades because AGC was the perfect example of where that how important it is not to have a bias, not to have that initial thought process, and just go with, for me at least, to go with what is the chart telling me, what is the big picture, and where we're at in terms of breakouts and stuff like that. So with AGC, my thought process, like I said, going in was if we can take out that previous day's high, we've got a potential to really make a move higher. If I have an opening range break or a flag set up near or at one of those key levels, I want to jump in because for me, I think the likelihood of a move is higher when it takes out a key level or when it's around a key level compared to just a random point, or particularly low or particularly below or particularly above that key point. I do also take longs on that, but there's different criteria for that. So with AGC, I actually stuck to the plan really well, and I entered the position right in here. Actually, no, I didn't quite get there. I got 17. I entered when 17 broke, and as per my initial plan, that was actually really well executed. I nailed the entry, and it did make a move, and then it got slammed back down. I set my stop at low of day, and obviously got taken out. Now, like I said, the mistake here was simply that we should have been looking at this from a short perspective, and this became actually pretty much an A plus short opportunity. We've had a break over that $17 mark. It's a false breakout because it makes the move. You'd expect longs to come in, and then it tanks. It can't hold VWAP. It holds below VWAP. This is a very, very, very bearish signal. So the short would have been, around the VWAP, around somewhere here. So probably getting in around 1680. And then I have added an element to my strategy over the past few weeks where if it takes out the low of day, it's actually an opportunity to add, because I found that the win percentage when the stock then takes out the low of day isn't really affected at all by when we add, the win percentage is exactly the same. So if it takes out low of day, like pretty much every single time, it works. So had that been the case, I'd have had an average of around about 1670, and my first target from the 5-minute chart was in around sort of like the 1570 area, so I'd have taken half off there. And given that I would have, been up over a point realistically on probably 300 shares, when the maximum I would have been risking on this trade was the equivalent of 30 cent on 300 shares, I would have probably taken half off and then another quarter once, either down here or when we bounce back up, to make sure I lock in at least 250 bucks on the trade. So I ended up losing on AGC $88.72 with the long, and it really should have been a trade where I made 250 on it. So a bit of a turnaround there. The one cool thing is that it was human error, and it's I would say that the last few days, although I had nice P&L results, my trading accuracy hasn't been as good as it could be. So this was kind of like the wake up call, was a case of like you need to be really on this. Um, so yeah, it's strategy still works fantastically well, as we can see from this. I just need to be a little bit better at my recognition. We then made one, I would say, mental game error, which was when I tried to short PETZ. This one was a little bit like a revenge trade. I think I was a little bit annoyed at myself for missing out that opportunity, was then looking for another one and saw PETZ and thought, okay, you know what, this tried to take out the previous day's close, it's come down, and I jumped in short at VWAP here. And in terms of the pattern and the intraday setup and everything, again, I've actually executed this one really nicely. We've had a false move higher, it's come down, it's slammed through VWAP, couldn't hold 6. It's pretty much what I'm looking for, and we have taken a lot of trades like this. If I look at the 2-minute chart where the lack of volume is sort of tied up a little bit, it is a good setup. But again, the issue I have is at this point, given that this was the breakout day, one thing I look for is how many ATRs we're up from the breakout or from this here. And at that point, we were only up around about 2.16, which is just around about a little bit more than 2 ATRs. And crucially, the volume in the last few days has really died out. So I think on PETZ, the issue again came from not analyzing it clearly enough pre-market. I'm a big fan of trying to capture the easy money. This is the easy money. Now, I don't know if there was actually a trade opportunity in here that we could have taken advantage of. It doesn't look like there was anything super clean. Once that has happened, I really need to wait for either a push higher or a clear break of this 571 first. If 571 breaks, comes back up, rejects, then I'm fine with it. So I think it was again a lack of attention maybe on my part. Like I said, we were short in here, and I recognized that was the case in and around here, and I really wasn't liking the position I had. So when it spiked up, I decided I'd actually put in a range order, and I got filled in the end at 604, which really isn't too bad. It was only a 5-cent loss, so I lost $20 on that one. It's not too bad. And then the final trade I took was on EVGO, and this one was another one where in the moment I felt it wasn't all that great. And the cool thing about the way I look at my strategy and how I look to improve is when I have a trade like this and it sort of like throws up a bit of a red flag as I went, this just didn't feel correct, but it has technically met my criteria. So in a sort of like a very basic way of explaining my criteria, what I look for is a false breakout, a stock that's up a lot, which EVGO is, in terms of because I did take this one short in terms of looking for a stock that's up a lot, perfect. And then I'm looking for a false breakout, which technically, you could class this as a false breakout. I'm going to go for why it isn't in a second, but technically it's a false breakout. It couldn't hold VWAP, so you take it short of VWAP, and this strategy has a really high win percentage, looks really good. It fell off. I took it, kind of regretted it. I think I wasn't quite all there at this point. I was a little bit disappointed with missing opportunities, and I began to second guess myself because I think pre-market I had really clear ideas of what I was expecting to see with EVGO and AGC being longs, and all of a sudden I go, actually I've screwed this up, and now I want to be short biased on it, but now I don't really know what I felt out of it. So I took it, and in the moment, initially I felt that this is a good play, and then pretty quickly I thought, this doesn't actually feel right at all. I obviously got stopped out of this one up here for a loss of $90. So when I looked back, I realized the first thing is that we've had this big sell-off here, which I don't really like. I went back through this in, I sort of like did a review of all of the times a stock has sold off. And I found that the 4 times that I've taken trades that I've said have been in line with my strategy, every single time that it worked, it first came up and took out the high of day as a false breakout, or it went green and then sold off, or the one time it didn't do either of those things, it was that situation I was talking about a second ago on PETZ, where it's taken out a key level of support, it's come back into that level, and it's failed to hold above it. So here, this is, I would say, technically a major mistake because it's had this big sell-off. On top of that, this isn't a false breakout. Like, nobody's looking to get in long here. A false breakout isn't just a line breaking on the chart and it pulling back. It's a level where once it breaks, I'm expecting longs to pile in. So 1889, we can see maybe this is where longs get in, and that's reflected by the fact that the highest volume candles since the opening, sort of like half an hour, are in there. Had this had spiked up to here, rejected previous close, come back down, held on the VWAP, different story. Now we've got longs involved who may be risking to the low of day, for example. But where I got in was not an ideal short position. There was, I think, one potential play that I missed, which ended up being, I think, probably a scratch anyway, and that was on MVTS. So obviously, initially, I was long biased on the stock, and what ended up happening is I missed the opening range break because, well, to be honest, I don't think I really should have done. I think if I was really long biased on this, this looked very, very good to go when it took out 1850. Being completely honest, had I jumped in, I'd have taken 30% risk, I'd have taken maybe like 300 shares here. It did give a solid move. I would have taken some off into here for sure, locked in a small or decent profit. If not at 19 when it broke and failed, definitely some there, and would have got the rest out for scratch. So that was a possible. The reason I don't like the long in general is, again, this is the 3rd day and it's gapping up, so it's not ideal. But I think there was an opportunity to take a short, and it may well have been that short was a scratch, but we actually had a really quite nice setup, and it was a false break over the 19 area. So whole number, takes it out, gets slammed back down, tries to hold VWAP, bounces. Once that fails, takes out the low. The short could have been right in here, would have been around about 1870. I'd have probably got 1870 on this if I was going short, risking 30 cent. And it would have been a very boring trade. There's no denying that. But 300 shares at 1870, it did take out 1845. I would have probably, at this point, once it's done all this, just put the stop at like 1870 itself. So I might still be in it right now, and it's not looking likely. We've got 40 minutes to sell off, so it may well do. But it would have been a scratch trade at worst, and if it does somehow sell off, maybe we'd be able to lock in a bit. So I would say that there were two, at my watch list, there were 2 legitimate short opportunities. One of those being on AGC, which turned into a massive trade initially and then came back. And then MVTS, which is a scratch trade at worst. So the positives to take away is that the strategy performed incredibly well today. the negatives are, well, the other positives actually is today I lost a total of $200, which doesn't feel great, but on my winning days at the moment, I'm making comfortably more than that on a good winning day, and on a sort of like an okay day, I'm making around that. On my big win days, I'm making more like 500 or 600. So I feel like the risk rewards is bang on. I think I've had 9 green days and 1 red day to start the month, which is another positive. So in that respect, it's good. I am actually really hard on myself, so I would say that there was a missed opportunity. Not the end of the world. So just got to look into how to get even better. Maybe refine my pre-market approach. But overall, yeah, a really solid start to the week. And yeah, 10 days into the month, all going well so far. The only other position, obviously, I still have my Pfizer, which I had, from down here yesterday, from, what was it, 49.29. The likelihood is I'll close this out. I don't really want to hold it over the weekends. I don't want to be, I don't mind holding it one day. Now we're showing a little bit of weakness. It's kind of at that point where I don't want to hold it one more night or over the weekend because news stories coming out over the weekend may well move it a little bit more drastically. So we'll probably close that out, which won't be, which will be nice to probably make around 50 cent at worst on that. Add another $30 of profit to that trade. But yeah, that was today. Not the best day, but as bad days go, it wasn't too bad.